Hi, my name is Yashwitha from Trichy. Let's talk how China is America's biggest banker. The US debt to China is $1.07 trillion as of December 2019. That's 16% of $6.7 trillion in treasury bills, notes, and bonds held by foreign countries. The rest of the $23 trillion national debt is owned by either the American citizen or by the US government itself. China has the second greatest amount of US debt held by a foreign country. Japan rose to first place in June 2019. China has reduced its holdings of the US debt since November 2013, when it held $1.3 trillion. It is taking steps to make its currency, the yuan, transition to a global currency. To do that, China had to loosen its peg to the dollar. That made the yuan more attractive to forex traders in global markets. China's economy is also slowing down due to President Donald Trump's trade war. As China's exports decline, it's less able to invest in US treasuries. China is also liberalizing its control of the yuan, also called as the renminbi. It has opened yuan trading centers in London and Frankfurt. It allowed the yuan to trade in a wider range around basket of currencies that include the dollar. China is also responding to accusations of manipulation. Most countries want their currency values to fall so that they can win the global currency wars. Countries with lower currency values export more since their products cost less when sold in foreign countries. China has held more than $1 trillion in US debt every year since 2010. That's when the US Department of the Treasury changed how it measured the debt. Before July 2010, Treasury reports showed that China held $843 billion in debt. This makes it difficult to make long-term comparisons. China owns almost a fifth of the US debt owned by foreigners. The Chinese government uses dollar it has on hand to buy treasuries. It receives these dollars from Chinese companies that receive them as payments for their exports. Owning US Treasury notes helps China's economy grow. Demand for dollar-denominated bonds raises the dollar value compared to the yuan. That makes Chinese exports cheaper than American-made goods, increasing sales. The US consumer benefits from low consumer prices. China's position as America's largest banker gives it some political leverage. It is responsible for low interest rates and cheap consumer goods. If it called in its debt, US rates and prices would rise, slowing US economic growth. On the other hand, if China called in its debt all at once, the demand for the dollar would plummet. This dollar collapse would disrupt international market even more than 2008 financial crisis. China's economy would suffer along with everyone else's. If China ever did call in its debt, it would slowly begin selling off its treasury holdings, but even at a slow pace, dollar demand would drop. That would hurt China's competitiveness by raising the yuan's value relative to dollar. At some point, US consumers would buy American products instead. China could only start this process after it further expands its export to other Asian countries and increases domestic demand. Let's talk about China's debt holder strategy, how it's working. China's low-cost competitive strategy worked. Its economy often grew more than 10% for the 3 decades before the 2008 recession. As of 2018, it's growing at almost 7%, a more sustainable rate. China has become the world's largest economy in the world, outpacing the United States, the European Union. China also became the world's biggest exporter in 2010. China needs this growth to raise its low standard of living. For these reasons, China will continue to be one of the world's largest holders of the US debt.